Your Social Security check is hitting your bank account this June, and I need you to stop before you do anything with it, because there is a rule buried inside that check that most people have never been told about. And depending on your situation, your age, your work history, your marital status, what you do with that money right now, and when you claim it, could either protect you for the rest of your life, or quietly take thousands of dollars from you every single year. And here is what should stop you. The Social Security Administration processed your check. They're not going to call you and tell you that you may be getting the wrong amount. That is not their job. So stay right here with me. I'm John. This is my channel, John Retirees. If you're new here, welcome. Go into the comments right now and tell me what city and state you're watching from. I love hearing from you, and I read every single one. So here's what I want to go through today. First, I want to tell you why June specifically matters this year, and why this is not a normal month when it comes to Social Security. Then I'm going to walk you through 5 rules, 5 specific rules, that apply to your June check depending on who you are. And I am going to tell you who is most at risk of getting it wrong. And then finally, I want to give you a clear action checklist so that by the time we are done here, you know exactly what to look at, what to verify, and what not to touch until you have done that verification. No panic, no politics, just clarity. So let us start with why June is different. Every year there are certain months where something shifts, cost of living adjustments happen, Medicare premium changes happen, and what a lot of people do not realize is that your net Social Security check, the number that actually lands in your bank account, can change without anyone calling you, without anyone sending you a letter you actually read, and without the Social Security Administration doing anything wrong from their perspective. They process what is on file. And if what is on file is outdated or if your circumstances have changed, the number hitting your account may not be the number you are entitled to. That is what we are here to fix. Now, let me give you the 5 rules, and I want you to think about which one applies to you as I go through each one, because this is personal. This is your money. Rule number 1 is the COLA rule. You have probably heard of the cost of living adjustment. This is the annual increase that Social Security applies to your benefit to keep up with inflation. For this year, that adjustment already went into effect. But here is what people miss. If you were not claiming Social Security in January when the new amounts were calculated, or if you started claiming mid-year, your COLA may not be reflected the way you think it is. And if you had any changes to your Medicare Part B premiums, which come directly out of your Social Security check, a COLA increase can be partially or fully eaten up before it ever reaches your account. So the rule here is simple. Pull up your My Social Security account and verify what your gross benefit is versus what is actually hitting your bank. If there is a gap you cannot explain, that is money you need to investigate before you assume it is correct. Rule number 2 is the earnings test rule. And this one trips up more people than almost any other rule I talk about on this channel. If you are under your full retirement age, and for most people right now that is age 67, and you are still working and collecting Social Security at the same time, Social Security will withhold a portion of your benefit for every dollar you earn above a certain threshold. This year, that threshold is $24,180. And what happens is that people see their check come in and they think everything looks fine. But the withholding catches up to you. Sometimes months later, sometimes a whole year later, Social Security comes back and says, you were overpaid and now you owe us. That is a devastating letter to get. So if you are working and collecting at the same time and you are not yet at your full retirement age, you need to know exactly where you stand on that earnings threshold before June turns into a problem you're dealing with in the fall. Rule number 3 is what I call the Medicare trap. This is the rule that affects people who are on Medicare and Social Security at the same time. Your Medicare Part B premium, and sometimes Part D, comes out of your Social Security check automatically. And there is something called IRMA, which stands for Income-Related Monthly Adjustment Amount. What this means is that if your income from 2 years ago was above a certain level, Medicare is charging you more than the standard premium right now. And here is the painful part. A lot of people had a higher income 2 years ago because of a one-time event. They sold a house, they took a large withdrawal from a retirement account, they had a business deal close, that income is gone. But Medicare is still penalizing you for it in your check this June. And most people do not know this is reversible. You can file what is called a life-changing event appeal with Medicare and request that they use your current income instead of your income from 2 years ago. That can put hundreds of dollars back in your pocket every single month. So if your check looks smaller than it should and you had a one-time income event a couple of years ago, that is the first place I would look. Rule number 4 is the spousal and survivor coordination rule. This one applies specifically to people who are married, recently widowed, or divorced after a long marriage. And I am going to spend a little extra time here because the numbers are significant. If your spouse has a higher Social Security benefit than you may be entitled to receive a benefit based on their earnings record, not just your own. But the way that gets calculated and the way the two benefits get coordinated depends entirely on timing. If you claimed early, at 62, at 63, at 64, before your full retirement age, your spousal benefit is permanently reduced, not temporarily, permanently. And that reduction can be the difference between $900 a month and $1,500 a month for the rest of your life. For widows and widowers, the stakes are even higher because you can claim 100% of what your spouse was entitled to, not 50%. But again, timing matters. You can claim survivor benefits as early as age 60, but claiming early means a reduced check forever. So the rule here is this: before you assume the number in your account this June is correct, verify what the combination of your own benefit and your spousal or survivor entitlement should actually be, because Social Security will pay you what you asked for. They will not tell you that you could have gotten more. Rule number 5 is the taxation rule. And this is the one I think catches the most people off guard, because most people think of Social Security as their benefit, their money, their retirement income. And then tax season comes, and they realize that up to 85% of it was taxable. And more importantly, nobody withheld anything from the check throughout the year. So now they owe. The rule here is not complicated, but it requires action. If your combined income, which is your adjusted gross income plus any non-taxable interest plus half of your Social Security benefit, is above a certain level, a portion of your benefit is taxable. And you have the option to request voluntary withholding directly from your Social Security check so that you are not hit with a large bill every April. If you have not done that and you're in the income range where this applies to you, the time to set that up is now, not in February, now. So let me bring this together for you. You've got 5 rules: the COLA verification rule, the earnings test rule, the Medicare IRMA trap, the spousal and survivor coordination rule, and the taxation withholding rule. And here is what I want you to actually do before the end of this week. Step 1, create or log into your My Social Security account at ssa.gov. Do not skip this step. That is where your records live. Step 2, verify your gross benefit amount versus your net deposit. Understand every deduction. Step 3, if you're under full retirement age and working, calculate where you stand on the earnings threshold for this year. Step 4, if you are on Medicare, check your Part B premium and find out if RMA is being applied to your account and whether you qualify for an appeal. Step 5, if you are married or widowed, do not assume the coordination of benefits was done correctly. Verify the spousal or survivor calculation yourself or with a professional. Now, before we go any further, I created a free guide specifically around Social Security mistakes. It is called the 7 Biggest Social Security Mistakes. And mistake number 1 in that guide is directly connected to everything I just told you about spousal and survivor benefit timing. I am going to pin it as the first comment below this video, and it is also in the description. It is completely free, and it will walk you through each of these scenarios in plain language. Grab that right now while we are still talking. And if you want to go even deeper, if you want to actually audit your Social Security situation and find out not just what you are getting, but what you may be entitled to that you are not getting, I put together something called the Social Security Benefits Audit. You can do it at your kitchen table. It covers spousal benefits, survivor benefits, Medicare IRMA appeals, taxation withholding, the earnings test, and more. It is $47. And I will tell you honestly, the people on this channel who have gone through it have found situations where they were leaving $200, $300, $500 a month on the table without knowing it. That is real money. Over a 20-year retirement, that is not a small number. So if you want to go through that audit, it is also in the description below. I do want to take a moment because I have been getting a lot of comments about Medicare Advantage plans specifically. This year has been a difficult year. We have seen millions of people dropped from their Medicare Advantage plans, and the anxiety around that is real. I hear it in your comments. I see it every day. I have partnered with Chapter Medicare because I believe they are the best resource for unbiased Medicare guidance. They are not trying to sell you a specific plan. They are there to answer your questions, review what you currently have, and tell you whether your plan is still working for you or whether something has changed that you need to know about. The call is free. The advice is unbiased. Their number is in the description below, and you can also go to askchapter.org/insider to have them reach out to you. If you have not had your Medicare plan reviewed by an expert this year, especially this year, you owe it to yourself to make that call. I have tracked the savings my audience has found through Chapter, and we are well over $2 million at this point. You could be next. As always, this is not financial advice, and this is not tax advice. Please make sure you are working with a professional who knows your individual situation. My job here is to give you clarity, to make sure you walk away knowing exactly what questions to ask and what to look at. So if this helped you today, hit the like button, hit subscribe, and hit that notification bell because I release new videos regularly and I want you to see them first. Thank you for watching.